The average investor underperforms the market by over 4% per year, not because they picked the wrong stock, but because they sold it at the worst time. And it gets worse. If they're pulling income from their portfolio, that panic sell doesn't just hurt, it compounds the losses. They lock in at a bad return, they pay taxes on it, and then they lose future growth. This isn't a one-time mistake, it's a pattern. And if your entire net worth lives in the stock market, your wealth is basically riding in a convertible during a hailstorm. It looks great when it's sunny, but it's completely exposed when the storm comes. Welcome to the Wealth Planning Podcast with Brister Law, where we do more than just talk about money. We show you how to keep it, grow it, and then also pass it on to the next generation wisely. I'm Anthony Brister, tax attorney and owner, founder of the Brister Law Firm. Today we're talking about a topic that most financial advisors avoid, and it's you need assets outside of the stock market. Not just for diversification, but also for control. Here's a hard truth. Most people don't have wealth, they have a volatile number on a screen. Let's say you've got $1 million in stocks. You feel rich until the S&P drops 25% and you start staring at 750K. That's not just a loss, it's a gut punch, especially if you need that money now. So imagine this, you're retired, you're pulling 60K a year from that same portfolio, but during a down year, you still need that money. So you sell more shares at a lower price. You need more units to get you those same dollars, but those units are gone forever. That's called sequence of return risk, and it's a silent killer of retirement plans. When you rely solely on the market and market-based assets, you're constantly reacting and you're never really in control. Wealthy people think differently, and here's how they do it. They build portfolios with cash flow. They own assets that aren't tied to Wall Street. They prioritize liquidity, control, and structure. Let me give you some examples. Real estate. It doesn't flinch when the S&P 500 dips. Private lending. Being the bank means steady income and asset-backed protection. Life insurance. Not just for death benefits, but properly structured policies are liquid, tax advantaged, and recession resistant. Businesses and partnerships, this is where the real wealth lives. Private equity, collectibles, metal, they diversify their volatility. When everyone else is panicking, they're buying because they have options. That's not luck, it's by design and structure. Let me tell you about a client. Let's call her Melissa. She was a 49-year-old consultant with a thriving business. 2 years ago, she called me in a panic because her portfolio had dropped over $200,000 in 1 month during a market downturn. She had no other income source ready for retirement other than her SEP IRA, Social Security, and some bank savings. So we built her a plan. She bought a duplex in a cash flowing market. She moved $100,000 into some real estate lending deals with a 9% return. And then she funded a high cash value life insurance policy and created a living trust to hold the LLCs to hold everything. About 6 months later, the market tanked again, but she didn't care. She was actually calm and confident. Her rent checks came in, her lending returns didn't stop, and her policy was doing what it illustrated it would do. And guess what? She used that cash to buy more stocks while it was on sale. That's power, that's planning, and that's wealth done right. Let's talk about leverage too, because debt has been villainized in the wrong way, and a lot of people get it wrong. Wealthy people use debt not just to survive, but to multiply their income. Let me give you an example. You invest $100,000 cash into a $400,000 rental. The tenant pays the note down. Your property appreciates 3 to 5% yearly. You depreciate the property and you get some tax benefits from that, and then you cash flow, let's say around $400 or $600 a month. You're getting paid to control an appreciating asset with someone else's money. That's not risky, that's smart. And let's hit some nerves, because if you're listening right now, you probably feel this. You make a solid income, but you have no idea where your money's going. You're maxing out your 401k, but you still feel exposed. You've got cash sitting in a business account, earning nothing, just waiting for a good opportunity. You got a family, but no plan for if something happens tomorrow. Does that sound familiar? That's not a lack of effort, it's a lack of strategy. And wealth isn't just income, it's structure, control, and freedom from panic. And here's how I teach clients to think about their money. And it's 3 buckets. So bucket 1 is liquidity. So think cash, insurance, emergency funds. These are accessible within days and not exposed to the market. Bucket 2 is cash flow. So these are assets that pay you. Rentals, lending, businesses. Then bucket 3, we've got growth. That's things like stocks, private equity, Bitcoin, and other long-term appreciating assets. Most people only have bucket 3 and they have no foundation. So when it crashes, they scramble. With all 3 buckets, you never really have to panic. But here's what most people miss. You can have the right assets, but if they're owned or taxed in the wrong way, they can still hurt you. Real estate, it should always be in an LLC. Life insurance should either be owned by a trust or the beneficiary name should be a trust. Active business income, probably run that through an S Corp, maybe a partnership. Your legacy should be controlled through a revocable living trust and not left to probate. This isn't just for the rich people, it's for intentional people. If you felt that knot in your stomach every time the market drops, and if you're wondering if your income is working hard enough, and if you're making money but feel like you're building on sand, then this episode should be a wake-up call for you. You need to diversify outside of Wall Street, build cash flow that you can rely on, use leverage like a strategy, not a crutch, and structure everything for privacy, tax efficiency, and asset protection. If this episode hit home, don't let it stop at the insight. Turn this into action. Drop a comment. What's one asset that you own outside the stock market? Don't forget to subscribe to this podcast for weekly wealth building strategies that actually work. And if you're serious about building a real plan for your money, head over to bristertaxlaw.com and schedule a free discovery call. Let's build your financial future today, and we'll talk soon. Thanks.